Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. My name's Matthew Taylor.
I'm Katie Allan.
And I'm Lauren Thompson.
Welcome to the Ledger Lounge. So, I'm back.
He's back.
After a week away, being photographed and what have you. I'm back for episode 5 of the Ledger Lounge.
Woo!
I've got Lauren and Katie.
I'm back again.
Hi.
What's happened since the last one? Well, we're not allowed to mention the office move, are we?
No. We're in.
It does
We're
look
in.
lovely though.
We're in though,
Yeah.
and it looks amazing.
I picked my desk this morning.
Yeah.
So we won't mention the new office ever again because now we're the old office.
Just the office now.
Yeah.
The office.
It's not new anymore.
Yes, it'll be messed up and broken. Today, I think, talk about late payments. It's a big issue. Headache, yes, definitely a headache in, especially with small businesses.
Yeah.
Probably one of the biggest problems that they do face, actually.
Cash flow problems come from not getting paid by customers. The Federation of Small Businesses said that 52% of all businesses, or small businesses, suffer with late payments, or suffer from late payments. And I think it's something like £23.4 billion is tied up in late payments.
Wow.
Yeah.
Can you imagine what small businesses across the economy could do with £23.4 billion?
Yeah. Wow.
They talk about we need growth in the economy.
Yeah.
Yeah. And at 52%, that's basically, if you look at a row of high street shops of small businesses, half of them are not being paid on time.
Correct.
Yeah.
Yeah.
Which is quite shocking, really, isn't
Well,
it?
yeah. And, well, I suppose then leads to people shutting the business down because they've not got the money in and they can't be bothered with the headache anymore of chasing people and not getting paid.
If you're not getting the money in and you can't pay out, then that ultimately is what leads to failure, isn't it? When
Yes.
you can't pay the money and that's it.
Yeah. So it impacts on employees, potentially lose their job, made redundant because the business closes down. That impacts on society. So it's almost like a big chunk of some of the issues we have in society can be sorted out if we can sort out the flow of money from customers into small businesses.
Yeah.
Yeah. And then between each other as well.
Yes.
Between paying suppliers and getting your money in.
Yeah, I suppose it's a two-way street, isn't it?
Yeah, absolutely.
So small businesses buy from small businesses.
Yeah.
Yeah.
So pay your own bills on time.
On
but
time.
If you've not got the money from your...
Yeah, it's a vicious
like a chain
circle.
reaction,
It is
isn't
a
it?
chain
Just-
reaction, yeah.
I suppose the question is really then, that's the problem, but what can we do about it?
Zero.
Zero's got really good invoice functioning on it though, hasn't it? Where
Yeah.
everything's done in one place. You mentioned before, taking the barriers down from people, perhaps maybe people printing the invoice off and then going, oh, what's the bank date? I'll do that later because I need to log on to my bank to do that. If you've got, like we use Go Cardless, don't we, at work?
Yes.
You just put people's details in once and the system will collect the money for that invoice from them. That they agree to it, obviously, they sign a mandate or whatever. But then it stops them having to think about when they're going to pay it. It's already going to be paid. But also we've got continuous cash flow coming in and really we ain't got to chase the money.
Yeah.
Which is a great addition to having an invoice that you've not got to run around debt collecting anymore and printing off reports and who's owed for the longest, who should we chase first.
It's a really good point that because again, resources, small businesses have got limited resources. So if you're spending your time chasing debt, then you're not working on your business. So I always think that a clear invoice with all the information that your customer needs on it, if there's a purchase order number, if there is references, the right dates, the right descriptions on it, to make it as easy as possible, and you've got to remove the barriers to somebody not paying you.
Yeah.
And also, if you're sending email invoices out, which most people are, then a big button on it that says "Pay Now." So a lot.
It's all in one area, then, isn't it?
I think most people do business on the phones these days.
Yeah.
Or on a tablet. So having a button there with an email that allows them to press that button, pay now, links to Stripe, which is an online payment provider, or as you say, Katie, setting up a direct debit through Go Cardless.
Yeah, I mean, there's a small fee that they take off you, but going back to when you just mentioned you're using somebody to chase the debt where they could be used elsewhere, that little fee that you get charged by Go Cardless is actually more convenient for us because you're using that person that would be doing that job for other things, which is you, actually, isn't it?
Yeah, often that's one of the challenges you get back when you're talking to clients about using payment providers or payment gateways, is that they don't want to pay that 20 pence plus 1.4% or whatever the figure is that you'll get charged by the provider. But the amount of time you can save in your own resources, and therefore you're probably better off spending your time running your own business, getting more business in, more customers. And
that you can justify paying that small
fee.
Fee.
Yes, exactly.
And the money's coming in sooner for that small, tiny fee rather than waiting over a month for it or even longer.
Yeah. I mean, we adopted Go Cardless in our practice about 18 months ago, maybe 2 years ago.
Yeah.
And we saw our debtor days, which is a measure of the length of time from the invoice date to the date you get paid. We saw that drop by about 30%.
Wow.
So we've seen the benefits of it. And it's a really good tool to get.
So that small fee is well worth it to you then for that turnaround in
I think so.
The time paid.
We're not spending time chasing
it.
Yeah.
Xero can chase it for you, can't it? With the automatic reminders as well.
Yes.
That it does.
Is it? You can configure that, can't you?
You can set it to whatever you want. Yeah. But if an invoice remains unpaid after, say, 7 days, if your terms are 7 days, once that 7th day passes, it pings an email out to that contact that says this invoice is unpaid. And again, it should prompt them to click
I think
that
it also
pay now
allows
button.
a sort of minus 7 days. So 7 days before it's due, I think it'll send an email out as well.
Yeah.
Which is always good. Some people do always forget that they've got invoice. Well, not forget, but you might be that little forgotten business that they forget about. Oh, I forgot I had an invoice for them.
Yep.
And sometimes it's not on purpose.
It's good. No,
It's not like a malicious, I'm not paying it. Sometimes people just do forget, I think, sometimes to make the payments that they've got to do. And that email coming into their inbox, I go, oh, yeah, of course.
Yeah.
I need to pay that.
Mm-hmm.
So I think that's a really good tool that Xero does.
Yeah, so making it as easy as possible for people to pay.
Yeah, and pulling away from having that huge list of, I don't know, customers, clients, and what they owe, and ticking it off, ringing them.
Yeah, ringing them. You owe me this, and this, whereas them just getting that supplier statement from Xero automatically.
And I think, how long do small businesses leave it for before that small business that owes them money has disappeared, gone bust, they've shut,
Yeah.
There must be so much income lost.
Well, in 23.4 billion.
Yeah, well, that's what,
if you add it all up.
And something Matt mentioned on the last episode is that if he's building relationships with other small businesses, sometimes he wouldn't want to get on the phone and start asking about money and chasing money in. So Xero, because that sort of changes the relationship a little bit or can put a bit of a negative light on it, I think. So Xero sending out those statements, it's almost, my software's done it. It's not you having to personally go, hello, please can you give me X number of pounds? The software's saying, hello, you owe us X number of pounds, and it doesn't sort of damage that relationship you're trying to build.
Yeah.
I think it's a really good.
You see that in larger businesses, don't you, where they'll have a sales team and they'll have a credit control team.
Yeah.
They've got the resources to do that by having two completely separate people.
Yeah.
One developing the relationship and one collecting the money.
Mm-hmm.
This is where the software can bridge that gap.
Yeah.
That's probably something that in the last 10 years that small businesses have had available to them.
Yeah.
And maybe a lot don't realise that that's there.
Yeah, because most of the accounting softwares will probably do that, won't they? I haven't used anything other than Xero for a long time now.
They will have all that function now, won't they? They're all going that way.
Yes.
Yeah.
Yeah.
Maybe not your Excel spreadsheets. I don't think they'd do it. But
no, I think that'd be still down to making a phone call.
Yeah. Word document invoices.
Yeah. Oh, no, just a paper book with a transfer page on it.
Yeah, carbon copy.
Oh, let's not go back there.
Some people probably still use those.
They probably do, yeah.
Yeah, sadly, I remember that.
I do as well.
If then you don't get paid, what are the options then? You send a solicitor's letter.
Yeah, but this is another thing for small businesses. If have they got the money to go out and get a solicitor to chase maybe a small bill, they're going to think, well, right, they owe me 500 quid, but it's going to cost me £1,000 to get it back.
Yeah,
they're just going to ignore it and write it off.
Bad debt.
Yeah, which again leads to the same problems we started out with.
Yeah,
there are some cost-effective debt collectors that'll do just a completely standard letter. You give them the information, they'll send it out for a couple of pounds.
Right.
They can work, but again, it's very impersonal. I think prevention is better than curing in most things, isn't it?
Yeah, and I think it goes back to what we've previously mentioned, that you set your terms from the get-go before you even sent the invoice to your customer. You just have that conversation with them. My payment terms are 15 days after the invoice is generated. Mm-hmm. They know you've had that conversation with them. They then receive an invoice. They're aware. Xero sends them a reminder. They'll probably then get fed up with the reminders that they'll think, I'm just going to pay this. Do my head in. Hopefully.
As long as they're not putting it into the spam.
Yeah.
I think what's really important as well is when you first build in that initial relationship is to not let those first few invoices be paid late, and then because it sets the precedent of what's the relationship is. And if you allow it from the start, the likelihood is,
to dictate your payment terms,
the likelihood is it'll get longer and longer and longer, because we see it all the time, don't we, with certain clients that don't continue to trade with people that don't pay you on time. I think
the secret in any relationship is start the relationship as you want that relationship to continue.
Yeah.
So,
and Xero actually will show you on the invoice, it does say in the history whether they've opened it. You know, you used to probably get people, if you delivered it by post or whatever, oh, I've not had it. It must have got lost in the post. Whereas now you can go, oh no, you have actually had it
from the software.
you received it on blah and you've opened it. You've viewed the invoice.
I know it catches a few people out.
But if your payment terms are 7 days and the first invoice you issue to someone, they've not paid you for 45 days, don't do any more work for that business or that person, or because I think if you set out on that foot, it just. But
then again, if they need you and they want your services, then
they'd value you.
Yeah, if you stop providing that service for them because they're not paying on time, they'll start to pay on time.
Yep.
Surely, if they need you.
They need you. Yeah. I think we all our new clients now in the practice, when we send a proposal out, it automatically links to a go cardless mandate.
So that's set up from the get-go.
From the get-go. So before we do it, when we do the work, if it's cancelled, we'll get a notification so you know if there's a problem.
Yeah.
And you can deal with that problem straight away before you're too far in, before a month's gone by and maybe another month's gone by.
Yeah.
And you haven't been paid. So that speeds up the money coming in.
Yeah.
I think if someone's having a personal circumstance, that then you can sort of work with that. But if they're just general bad payers, then I think that's when you can sort of draw the line.
That's where having that relationship.
Being a human.
So we're back to developing that relationship.
With small businesses, they will prioritise who, let's think about a builder. He's going to prioritise paying Travis Perkins over paying their accountant or the stationery supplier or whatever, because they need the materials to finish a job for them to get paid. So you are sometimes, certain companies within small businesses are at the bottom of that pecking order.
Yeah. Of what
because they think, well, we don't need
value.
them. Yeah. We need them, but we don't need to pay them yet because we need to pay these, and they're just juggling money around to pay the bills.
The other way of collecting debt is to use software that links into your accounting software. Like, there's one called Chaser, which is an automated chasing software that will look at, again, using those due dates on the invoice. So again, making sure your invoice is right, so that it triggers the chasing activity. So those are other elements.
Yeah.
External software removes you then from having to do it, doesn't it?
Yeah.
So.
Yep. What about credit checks?
Credit check. One on me. 999.
Credit checks are really useful for own businesses. You can look at their payment history. You can see whether they paid the bills on time. And you can monitor that over time. So if you subscribe to a service, it will identify if there's a county court judgment against a company.
Right.
It would highlight it.
Is that like Experian that you can that you can do for businesses?
Yeah. So again, prevention before you get into the issue.
I mean, how brilliant would it actually be to be able to go into Next and be like, oh, I'll pay that in 60 days. Or, you know, like, I'll worry about that next month.
Walk into a supermarket, would you, and go and take the stuff and then say, sorry, I'm not paying for that.
Yeah, what's the payment terms?
Yeah. So, I mean, why do people, I mean, we know
I think it's just
people have their own issues and
and
priorities,
it stems from
like
probably
you say, don't they?
People, like we've said, it's a big issue in small businesses. So somebody might set up the small business and start talking to the friend who's also got a small business who says, oh yeah, like they just don't pay me on time, and then they just think, oh well, that's normal. I'll just, I'll worry about that if it happens to me.
A personal experience I had with this is my partner has his own business. We use Xero, of course, but we never had an issue with anybody paying us until we did. And then we introduced, if you've not paid this invoice by a particular time, then it incurs an interest charge.
Yeah.
Because we had one particular person that they just wouldn't pay. It's a fencing company. So we've already laid out for materials. We've already paid the lads' work. We're already running the vans. And then we're not getting paid.
Yeah.
But as soon as that was introduced, and that goes out on all the invoices now, and people pay.
Yeah.
What's the success rate of getting paid the interest if they underpay, if they pay late?
Well, when that was issued, then they paid.
They paid, right, okay.
Yeah.
Because they didn't want that to happen.
Even if you didn't get the interest, it was a tactic that worked to get paid.
Yeah, which, again, it's not nice, but it has to be done because at the end of the day, he's running a business and he's got things he's got to pay out for.
Of course. Yeah.
And the job's been done, the job's been signed off.
Yeah.
And I don't think it was a malicious reason for not paying. I think that this particular person was just really busy and just sort of thought, well, I ain't got time to do it. But putting that in there and sort of saying, well, if you don't pay it, it's going to increase by 20%.
Yeah.
And there's the other side of it as well when people, I mean, I've experienced it where, let's say you get 30 days credit or your supplier payment's due 30 days after previous month or whatever the terms are. If you pay early, some companies will give you a little bit of a discount, but they do that, don't they, just to bring the cash in. It might be a 2% discount, but small businesses will snatch your hands off at that because they're saving 2%.
Yeah.
And everybody's cash flow is flowing the way it should be,
Yeah. And everybody's happy.
Yeah. Not that I say everyone should offer a discount if they paid early, but it does work for some companies, particularly if you've got 30 days worth of invoices and the total of, 10 grand, 20 grand, they get that money in quickly. Yeah,
it's an incentive then, isn't it?
Yeah.
So we were talking about interest then, about Lauren charging interest, but there is statutory interest that you can charge as well, brought about by the catchily titled The Late Payment of Commercial Debts in brackets Interest Act of 1998. That allows you to charge 8% above the Bank of England's base rate. So you'd be able to charge an annual interest rate of 12.5%.
I wonder how successful that is for businesses actually applying that. I wonder what the success rate is for getting.
It might just be that you threaten it.
Yeah.
Like Lauren said earlier.
Yeah, and it's worked for you.
And it worked. It triggers payment.
Yeah.
So, and I think even just having it on the invoice at the bottom as part of the terms is a deterrent away from people
made well aware.
Not paying. Because each person that gets that invoice and they see that and they think, oh, well, I don't want to pay an extra 12% or I don't want to pay an extra 20%.
Yeah.
So I'll pay it on time. Because basically, if you don't pay and you don't pay that interest, they're not going to trade with you again.
No.
They're not going to work for you again.
It's having that fine balance on, isn't it, between not annoying your customers as well.
Yeah, but I think if they respect you and value what you do and what you've done for them.
No, they should be paying on time.
Yeah. So an example, if you were owed £1,000 and it was 50 days overdue, then you work out a daily interest rate. That works out at £17.81. Well, whilst it's £17.81, it doesn't sound a lot of money, but it's also goes towards you financing your business.
Yeah.
Which is as a result of you having to provide credit to other people.
Yeah, and you have to take into account the time that you then spend chasing that debt.
Yeah.
If the interest is charged, that sort of covers a bit of your time as well, because you shouldn't have to chase it because it should have been paid by X date. And now we're spending time doing this and chasing that.
Yeah, the aforementioned catchily named act allows you to charge reasonable costs as well.
Yeah.
So the two can go in hand.
I don't think I've actually experienced any clients doing that. Have you? In the past?
It's been a while.
Yeah.
It's been a while. But maybe that's because we've advised them to have the right payment terms and settle their invoices correctly and deal with the right people.
Yeah, and we phone them every month and said, do you know this person's not paid you? Do you know that person's not paid you?
It's really important that actually the service we do is highlighting these things to them and having those conversations with them.
Yeah. We talked about with Matt before on the previous episode about sometimes your accountant stepping in and chasing debt, saying to people that they're struggling with, that sometimes comes from a different angle where they think that sometimes works actually and they do pay it if it's, you know, they think,
because accountants are scary people.
Boom.
You can today. Are you coming on the next one?
I don't know, am I?
I don't know. If you passed the test.
I don't know.
Thanks for having me, guys.
Yeah.
Wish you better than
I might not be back. I might be.
Yeah, that could be an issue.
What?
So, Lauren,
better than me.
Are you enjoying doing these podcasts with
I am
us?
actually.
Yeah?
Yeah. It's a nice break on a Thursday from work.
Yes, it is. It is. Although we've not done a lot of work today, but yeah.
No, we haven't done any work today.
No, we've had.
But that's fine.
The cameraman in.
Yeah.
We can have a break.
Yeah.
Yeah, we deserve it.
So, till next time.
Yeah.
Goodbye from me.
Yeah.
Bye.
Bye. Thanks for listening.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allan and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.